Hey guys, how's it going? In today's video, I'm going to be doing a stock analysis on Hexo. This is going to be a pre-recorded video for September 20th, 2018. I might release this on the weekend, but I want it to be more like for videos throughout the week when the stock market's open. I want it to be current, and I want to be the news that happened that day. And but this was a pre-recorded because somebody asked me to do Hexo. I've done Hexo before, but I'm gonna redo the video because there's been new developments with Hexo, interesting developments. Hexo has gone up quite a bit, and if you bought it at $5 when it was around $5, or if you even managed to get it at $4 right now, you would literally double your money. But if you went and you bought Hexo just after the big boom, you would have made at least 60% or 70% of your money because the stock rose all the way up to $8.73. So I think the only reason why Hexo has gone up so much is because it would not make any sense for Hexo to not go up when they are considered one of the big LPs in Canada. They are a pretty big LP in Canada. The only disadvantage Hexo has is it's not focused on international. They're focused mainly in Canada, so that's their biggest problem. Right now they trade on the Toronto Stock Exchange, and they changed the name from Hydropothecary to Hexo Corp, and the trading symbol is Hexo, which is pretty smart to have your company name the same as your ticker symbol. The company is $1.683 billion. I think it's kind of overvalued, but at this stage of game, almost everything is overvalued. So that's just my thoughts on Hexo. That's just my thoughts on the Hexo stock anyways. Social cannabis education program. I don't think that's very important. So the biggest news that happened with Hexo is they have a joint venture with They have a joint venture with Molson Coors. This joint venture will be owned. Molson Coors own 57.5% controlling interest, while Hexo will own 43.5% interest. So if Molson Coors wanted to take over the joint venture, they could just buy out Hexo. But I found it weak that Molson Coors didn't do a big investment into Hexo, buying up the company instead of just going in and doing a joint venture with Hexo. I think it would have been better if they did a partnership and an investment. I think that would have been way more exciting than a joint venture. Because when this joint venture came out, the stock popped up 20%. But so this news came out August 1st, 2018. So on basically the stock skyrocketed 20% for the day, and then it slowly trained back down to $4. So this news was not exciting enough for the stock to keep rising. But since the cannabis boom, the stock benefited from everything rising, so the stock kind of rose too. Do I still think Hexo can go up? Yeah, it could still go up. It can go up to $10, but you know, it's a gamble. I mean, as long as the stock market as long as the entire MJ industry keeps going up, I believe Hexo will receive the benefits of the increase in share price and market cap. So this is a pretty interesting news. So Hexo acquired a 2 million square feet facility in Belleville, Ontario to create R&D and manufacture center of excellence. This facility will be making advanced cannabis products, including cosmetic, vapes, non-alcoholic beverages, and other edibles. So it's going to be basically manufacturing cannabis related products. This is a joint venture. This is an old Sears distribution center. I think Sears went out of business not too long ago. Ogan Holdings Incorporation owns 70. Hexo will own 25% of the building, and Ogan Holdings will own 75% of the building. But it's interesting because they're gonna turn this building into a facility, and this is the first time Hexo ventured out of Toronto, so it's pretty interesting news. I thought I'd bring it up. I mean, it's not game-changing news, but it's pretty interesting news, and maybe at the end of the day they can use the rest of the 2 million square feet facility to do indoor facility growing, because right now they have greenhouses. So from my research, greenhouses don't grow super high quality, but from what I hear also, Hexo somehow manages to grow super high quality using their greenhouse facilities. Hexo, this news was released on August 9th, 2018. Their first plants in the Harvest's first plant in the 250,000 square feet greenhouse expansion. So that's showing that, okay, now Hexo has at least 250,000 square feet of greenhouse. They can grow and sell product to the rec market when it opens up, I guess in October 17th, which is almost just literally less than a month away. So yeah, like 37 days away or something like that. So that's so that means that they'll be at least ready for legalization, because 250,000 square feet is quite a bit of space, including their own facility. They have over 310,000 square feet of growing space. So they'll definitely be ready for legalization. Oh, I don't know why Micron is there. But yeah, Micron had a decrease. I'm going to be talking about this in tomorrow's video, but this video is going to be pre-recorded, so I think this is my prediction on this video. So for September 29th, which I'll probably release on the weekend, I think that this stock is going down to like 35 bucks because there's some bad news come out, but I will talk about this tomorrow. This is my prediction. So by Friday, by tomorrow, it's gonna drop more than, I think it's gonna drop more than 7%. I think it's gonna be like around $35 or $36 or $37, around there. I think it's gonna have a massive drop tomorrow. And I guess you guys can see my prediction on Saturday or Sunday whenever I release this video. So this is Hexo's investor presentation. I'm just gonna quickly go through it. So this is pretty interesting. I didn't know that Yukon was both private and government I guess stores. That's pretty interesting. And then I would understand Northwest Territories and the rest of Canada. I mean, the north of Canada is government owned. There's literally probably 50,000 people living in this area right here. Not very many people because it's so damn cold up there. I think the only reason why people are up here is because I don't even know. Actually, never mind. I don't even know why people live up north here, but they do. So, and then Quebec is definitely is all monopoly owned by the government. Maybe one day they'll flip the switch and turn it to private and government owned stores, but for now it's only government owned stores. The most of Canada is all private and government owned. I thought Alberta was private only, but I guess it's also government and private, so that's a little interesting. And I did not know that Saskatchewan and Manitoba are just pure private and no government. I mean, these provinces literally have 1 million people each. I think one of them has 1.3 and one has like 1 million, so that the population in these two provinces are like absolutely nothing. This is a pretty interesting timeline. So they first sale medical patients from Time Day product line. They completed 35,000 square feet, launch in second half of second line of D Crab. Sure. So yeah, this greenhouse has been up and running for quite a while now, and according to some people, they have pretty good products, like high quality products. But according to my research, greenhouses don't really provide high quality products. They're no longer listed on the venture. Now they're directly on the Toronto Stock Exchange. They make like oil sprays, which is like the only launch Canada's first and only cannabis oil sublingual spray. So that's cool that they have a unique product that no other licensed producer has. Announced Sager partnership tissue, 5-year supply agreement. First plant, 250,000 square feet facility. So that was done in June. July, 10,000 square feet automated manufacturing facility. So they have at least a 10,000 square feet of manufacturing facility where they create the oil. They made an investment in Fire and Flower. Fire and Flower is the retail cannabis. They announced a joint venture on Molson Coors Canada in August 2018. The revenue per gram is $9.24. That's pretty good. I don't know, like, I guess they overcharge for the products or something. I'm not sure, but that's pretty good because I think Aurora has like $8 or something. So that's pretty good. That's pretty high up there for like the most of it. But the revenues really suck, and I'll get into it later. So I'll get into it later. Scalability, leadership, top 2 in Canada. Supply channel obtain. So they basically have 6 of the provinces covered. They probably will get these continents, like these provinces covered eventually, but right now they have a total of 6. So they have most of Canada covered, so they'll be selling product in Canada, all over Canada for sure. But then again, greenhouse products versus, indoor facility products from Aurora and Canopy and other licensed producers. 1 year of marketing share leader. So they're guaranteed 35% of the market share in year 1 of Quebec. Year 2, they get more. Year 3, they get more. They expect $1 billion of potential revenue for Hexo over 5 years. $1 billion for 5 years. It's not a lot of money. Aurora is going to be generating $1 billion probably in 2019. More than $1 billion. I think Aurora is going to produce way more than $1 billion in 2019. And like I said, the biggest problem with my 2 biggest problem with Hexo is 1, they have greenhouses. 2, they're not selling internationally. Those are the biggest problems right now. They already have 310,000 square feet of growing space. 10,000 of that growing space is for making the products, and they just purchased out a facility where they're going to be making edibles and cannabis drinks and all that in that Sears warehouse. And then the construction is underway for the 1 million square feet. It'll be completed. Wow, completion date December 2018. That's aggressive. That's crazy. If they do complete it by December 2018, they'll be definitely ready for at least edibles. Like this facility will probably be made, like, it's a greenhouse, so they're probably gonna use the extracts to make edibles and cannabis drinks. That's what I think. So they're gonna probably be using this facility specifically for other cannabis products, and then this facility is gonna be for dried cannabis products for the rec market when it opens up. Like this is the facility. It's Like, you can tell it's literally a greenhouse. It's like nothing special. It's like 100% greenhouse. So I don't know how effective a greenhouse is, but according to my research, greenhouses don't grow high quality product. They grow decent product, but not super high quality products. That's their biggest problem. But they do have some unique product, and their labeling is pretty good. When I read this, I was like, the first licensed producer to offer the active marijuana powder designed for oral consumption. When I heard oral consumption, I was like thinking, will you put it in your butt? But then I like researched it up. It's actually like oral consumption is actually sexual activity involving simulation of use of mouth, tongue, teeth, throat, oral stages, oral traditional culture immaterial transmission orally from one generation to another. Sure, but so it's like just consuming it through your mouth, not for your butt. But when I saw that, I that's my first assumption. I don't know why. I just like oral. But then I was like, maybe you just consume it after I looked it up. So it's a little funny. But yeah, they have some nice products. They use glass containers, which is nice. Like, people like, seeing glass containers. And they have spray oil products. And they're like the only company in Canada that has sprays. So that's pretty cool. Yeah, so they're planning to make vapes, soft gel caps, tropicals, edibles, beverages from Molson Coors. Right now they have sprays, pills, oils, and flour for the rec market. I think that's all. Okay, that's it. Now I'm gonna go to this financial report. This is quite old. I think I already went through this, but this was for ending April 30th, 2018. They should have a new finance coming out. They have a total of $250 million in short-term investment with $1 million in cash. They have really good assets, $300 million, and they have very low liabilities. Only $9 million of liabilities, which makes this company pretty safe, because low liabilities with high assets always a good combination. The only problem is their revenue right now. Their medical patients are not stacking up like they wanted to be. They're only selling $1.2 million of revenue product. Their gross margin is pretty good. It's 40-ish% or 50% almost. Not about 45%, 40%. This is pretty good. They lost some money that quarter, but almost every cannabis company is losing money right now. So my conclusion about Hexo, kind of overvalued. I mean, like, if you take all the supply agreements and everything they have right now, how much money are they really gonna generate in 2019? Is it gonna be $1 billion? Is it gonna be $200 million? Is it gonna be $50 million? Figuring that out will determine the value of this company, because I think this company needs to generate at least $100 million per quarter next year to justify a $1.6 billion market cap. But right now, financials don't matter. The only thing that every stock is just getting benefits from the cannabis boom. Honestly, I would not be a long-term investor in Hexo. That's just my opinion, though. I don't see the huge advantage Hexo has over other licensed producer, but except for the fact that they have a huge supply agreement in Quebec. So that's all. That's basically my whole summary of Hexo. Anyways, thanks for watching. If you like this content, please give me a thumbs up. If you dislike this content, please give me a thumbs down. Subscribe for future updates, and have a great day. Bye.